Hello, everybody. My name is Drew Dosek, and welcome to our new channel where we're going to be putting out lots of videos regarding market movers, cryptocurrencies, currency, as well as hot stocks. Each one of the traders here at Verified Investing are going to put together these videos to have for you every single day. So each day we're going to be shifting topics, but keeping you guys in the loop for what we see are big movers and things to pay attention to in the markets. All right. So today we're going to start off with market movers, and we've got three key stocks or market movers that I want to go into with a deep dive with you guys to explain what is going on these stocks, what to expect from them, and key levels of support and resistance in the near term. All right, so let's take a look. First up, let's look at SanDisk, guys. SanDisk is the leading gainer in the S&P 500 this year in 2026. It is a memory chip stock. So the memory play has been really on fire with the demand with the AI data center buildouts. However, most recently, SanDisk has been under a little bit of pressure. So let's look at this chart. So we see most recently, SanDisk put in a high at $770.60. Currently, we're trading down here at $666, a nice $100 drop in the last 4 trading days. Now, news has come out most recently that Google has a new turbo quant memory compression technology. And you know what, guys, when this whole march up on SanDisk was taking place, we were kind of scratching our head saying this will end pretty badly for SanDisk and a lot of these investors that piled into this stock, shooting it up so high, because usually what happens in memory shortages, companies end up coming out and producing more memory chips. Now, a lot of these memory companies have said they're not going to do that. They want to refrain. But as we just discussed, we have new technology coming out that is actually going to compress the amount of memory that's needed. So therefore, the memory is not going to be as much of a demand for the AI data center buildouts. It's still going to be important, but we're simply getting better technology. And think about it, guys. This happens very often, right? Technology comes out one year, the next year is a little bit better, the next year is a little bit better, but we're going to continue to have breakthroughs like this, which is why SanDisk being elevated as it is pretty dangerous and likely should start coming back in on the charts. All right. Especially too, when there's just any disruption in the AI build out space, such as DeepSeek the other year, which came out, according to the officials in China, this was going to be the next best AI software and chips. However, that just didn't pan out, and Nvidia is still leading the way on the AI chips, but there will be competitors coming out each and every week with new attempts. We're actually going to speak about one today with ARM. But first, SanDisk. All right. So where we are at with SanDisk at the moment? We see, as we've discussed, we've had a high pivot, and then we've since now come back in. Now, you know what? I'll delete this trend line to kind of bring your attention mainly to this. This was the previous high pivot on February 3rd. And if you notice, I've drawn a trend line down connecting this pivot high, as well as this consolidation that SanDisk went through in order to break out. And when it did break out, you can see we closed here above that trend line on March 13th. Then we had to push higher, securing the breakout, creating this declining trend line as support. And you can see price today came straight down into that declining trend line, which is located right here on the screen. In a sense, gotten a great bounce up. That low here is $638. It got as high as $687. So a nice pop up here, almost $50 on the chart. And you could have noticed this too by simply just drawing a couple trend lines on the chart. Now we step back further and notice that SanDisk has been in for 2026 inside an inclining parallel channel. Now, if price over the next few days with SanDisk hangs out near this declining trend line, which you see this value at $633.50 tomorrow, as well as $630 moving into Friday, then we're going to be getting awfully close to the bottom end of this parallel channel. Now, also, there's a couple different ways that this can happen, because the bottom end of this parallel channel will be support. You notice that this area has only been tagged now once and twice. Usually the third time generates a pretty decent bounce. So be mindful, especially if we plunge down into this level, it should yield a bounce at least up to this declining trend line. So we're talking about $599 up to around $630. If we chop sideways going down into the parallel, be watching how we trade on the parallel. A consolidation in this range too would then lead to probabilities increasing for a break of that parallel. Ideally, if you're a bull in SanDisk, you want to see price plunge down into the bottom of this parallel to give you the ideal bounce back up so that you can exit the position right here amongst the lower range of this consolidation chop, just under $700 on the chart of SanDisk. But for now, main area to watch, guys, for medium and longer term is the bottom of this parallel. If this breaks, we're now talking about a trend that's broken. We will catch support, likely retest the bottom of the parallel, but then ultimately break in trend will likely pull price back down all the way down here to this inclining trend line that we see here on the chart, right under $500. And that aligns with this consolidation here too. All right, next up, another major mover in the market today is ARM Holdings. Look at this big pop on ARM, up over 20% today. ARM is surging on the charts. One of the main reasons ARM is doing so is because they did release news that they did come out with their first ever in-house design chip, the ARM AGI CPU. It is a data center processor optimized for AI inference and agentic AI workloads. So AI is definitely the hot commodity right now, and investors certainly rewarded ARM with a nice surge up today. But you notice price really hit on the brakes on this $165.37 level. Now, the good news is for ARM, we got into the top 50% of this inclining parallel channel. In order for this break above to remain bullish, we need to ensure that all the dailies closing in the following week remain above this 50% area, which right now looks like that could be easy to accomplish since we are up this high. Now, since we did have such a huge surge in one day, be mindful that we could have a period of consolidation before moving higher. Next resistance at $173.68, which comes right amongst all of these recent pivot highs and the bottom price range, in essence, the underbelly here in price on October 27th. And should that area be beat, especially in a violent, aggressive, vertical manner, this area of resistance is something to pay attention to. 187.17, right at the top of that parallel channel. If we look at ARM's RSI on the daily time frame, we are overbought near term. Makes sense. We should see more consolidation in this range before we gain momentum to make another surge up and test the high end of that parallel channel. Next up, the biggest market mover of them all, folks, Nvidia. Guys, you got to cover Nvidia if you know what's going on in the markets. Keep your fingers on the pulse. Yeah, they may have moves of 2 or 3%, but the market cap is so big, it really pulls along the rest of the stocks in the S&P 500 in its wake. So you got to be mindful what's going on with Nvidia today. All right, so Nvidia so far having a nice day, pushing up over 2%, currently at 2.24%. It did catch resistance right here at this gap fill. You can see this gap fill at $180.40. Now, a little bit further analysis, we see that Nvidia has broken two trends. The bottom of this parallel channel where it broke, retested, and then came back down, consolidated on this inclining trend line, then has since broken that. So we've had two trend breaks on Nvidia. That's not very positive. Plus, this is a larger downward movement and sideways consolidation. That is a larger bear flag on the chart of Nvidia. Near-term upside, be watching for resistance right here at $185.15. If we get price above that trend line, now we can start talking a little bit more bullish near-term sentiment for Nvidia. But as long as price remains underneath this inclining trend line, probabilities dictate we should be coming down with the first minor support at $169.56, followed by the major support down here at $153.13. All right, guys, that does wrap up today's Market Movers video. I hope you guys enjoyed our first introductory to this channel. We're going to have a lot of alpha available for you here. As I said, all of the traders are going to be composing these videos, keeping you guys on the right side of the trade, highlighting specific levels and key stocks that you guys need to be paying attention to throughout your trading day. Thank you again for watching. My name is Drew Dosek. I look forward to having some more pointers out to you soon. Until then, you guys have a great day. Take care.